Pass 4 million of property to your children and grandchildren using this legal loophole and it'll cost you only 6%. Consider the case, which is a client I met this week, and we'll call her Roisin. Roisin has 2 children and 2 houses. Jack, a bachelor, lives in one. Mary lives in the other with her husband and children. Both houses are worth €800,000 each. Most families think when the parent dies will be clobbered with tax, and in this case the children face a combined tax bill of €250,000. But that's only true if they do no planning. The first house isn't left to Jack outright. We give him a life interest. Jack inherits the right to life, not the full property. He's 58 and the value of his inheritance triggers no tax because of his lifetime tax threshold, €400,000. So the property passes to him tax-free. Mary inherits the second house. Her mum lives with her, so she claims dwelling house exemption. Not only does she have no inheritance tax, her lifetime tax threshold remains fully intact. Remember that. Now, €1.6 million of property value has passed to Jack and Mary with no tax. When Jack dies, the property still doesn't pass outright. Mary now receives a life interest in his house. She pays no inheritance tax because she uses her lifetime threshold, which she'd saved earlier. The family has now transferred 2.4 million of property 100% tax-free. When Mary dies, her daughter inherits both houses. If she's still living in the family home, it passes tax-free to her too. Now we've passed 3.2 million without inheritance tax. Only the final property that Jack once lived in is taxable. At 33%, this triggers tax of €250,000. But that's the only tax on inheritances of €4 million. That's 6.25%. Inheritance tax rules are there to be used. Most people don't. Don't get caught out by poor planning. Follow for more tax tips, please. And for a consultation, go to taxunwrapped.ie.